Good morning and welcome back to another pipeline trading video. One thing I want to start this video with, just to give some clarity, if you've noticed the Instagram and Facebook page is down, it was attacked. So someone did something, filed a complaint, or I don't even know what, but it was pretty interesting how it all happened after I was using AI voiceover. So hang in there. We're trying to figure it out and get it settled with Instagram and Facebook to see what exactly the issue is. And hopefully we will be back up and running there. And first things first, on the charts, I want to go over the S&P and the Nasdaq. We're seeing all-time new highs. And what's interesting about this is a lot of people might be looking to buy into this rally. And for me, that's not a smart play. The risk reward is not there yet. What you'd want to see is the market come back down and test the 50 or the 20-day moving average as support, because keep in mind, this blue here is a fair value gap. What you're seeing is this is where a lot of liquidity is. And this is the 0.382 Fibonacci, which I have, that's one of the biggest levels that I was expecting us to hit first. We did go into the first fair value gap, which was around 582, I believe. But still, I was anticipating for us to hit 545 on the QQQs, which is the Nasdaq, and 612 on the S&P, the Spider ETF. Now, I still think that, now that we made a new high, the market's already priced in a lot of what people were anticipating. And something else that I picked up on that not really seeing too much coverage on, you're probably going to see a lot of the talking heads talk about how they won't buy into this market. It's high and all this stuff, but there's something a little bit deeper there. If you look, the net short on global equities is the largest in almost 13 years right now. So what that means is a lot of the institutions like Goldman and JP Morgan were actually short. And right now they're getting a good squeeze. So we're going to see how this plays out. Could it keep going up a bit? Yeah. But then again, look, if I take you over to the semiconductors ETF, so this pulls in all the semiconductors, this was at 84, this number, the last time I did a video. We're now at 91. This is at 94. This is at 86. We're now above the line. So you look at the RSI, we're in overbought territory. You look at the overall market, we're in overbought territory. There's not really too much upside now unless we get a bigger pullback, confirmation, one of these moving averages or the 200-day, because remember, when we broke above the 200-day moving average, it was a gap. And gaps typically get filled. We don't know exactly when, but there will be a point. And based off of this rally, nothing's changed. That's the interesting thing. Nothing's changed. The straight's open. Okay. But it doesn't really change much on, what was it the other day when the market was rallying? Oil was still at $94 a barrel. So if you look at oil, yeah, we're getting a good drop. Could go into the 60s. But what a lot of people aren't talking about, if you look at the weekly, we're at the 200-day moving average almost. That's at 79.75, roughly. There's a fair value gap. We could come, test this as support, go as low as 72 before making our next leg up if things escalate in the Middle East, which we don't know. So before you hop on the bullish bandwagon, the purpose of this video today is to just keep you level-headed. I'm going to take you over to Bitcoin. Bitcoin's still doing, what I said it could do before making its next leg down, and you're seeing it in real time. On the weekly chart, we're at the 200-day moving average. Okay. Now, if we broke above the 200-day moving average and held that, then I would then be flipping more to the bullish side. But you could see right here that anytime we've done that, we get rejected at first, right? Until we break above, you're good. Now, another thing to mention is this would be the shortest bear market we've ever seen since the inception of Bitcoin on the weekly. Like, if you look at this chart, it says it all. There's nothing really for me to say. So this is the rally. We're still in a bear flag. If I go to the lower time frame, still in a bear flag. And if you remember I think it was maybe 4 videos ago, I was saying we could keep going back and forth. And the further I pull this out, right? And what I'm doing is I'm just trying to make it touch as many of these points. It's not going to be perfect, but it gives you a rough idea on, where we are. Can we go to the 200-day moving average? Absolutely. Can we go to the halfway mark on the distribution of the Y-clef from this area? Absolutely. And I believe now that we've broken, we can go and touch the 200-day moving average. We could even break above it temporarily and then fall back down. Now, will that happen? I don't know. That's why I'm saying stay level-headed. Let's see what happens, because for me, what I would like to see for me to go bullish is for this to curl down into this zone, 64, 65 level, around here where the liquidity is, and hold that as support, 63. If we come back down and we hold that support and we don't puke down lower, then I would flip to more of a bullish, because then this would be more like an accumulation. So until that happens, I'm not going to buy this market here on the long side for this. It's not a really good risk to reward, especially with the geopolitical issues. So keep that in mind. If anything, I'm going to be adding to my short position, because I do have longs that I've been holding, and I did a video 2 days ago showing how I'm selling covered calls on my long positions and bringing my costs down. And I'm more based on that position's for longer term. In the middle, what I'm doing is trading these ranges. And until we get confirmation where we come back down, hold these levels as support down here, I'm not going to flip bullish. You go to ETH, same thing. It's a measured move. I said we would go to 24. I said the possibility of going to 24 if we break above this is huge. Why did I say 24? Because it's the 0.618 Fibonacci level. Now look at this blue. We have a massive order block down here. A lot of liquidity. What's interesting is a few videos ago, I talked about this level having a lot of long liquidity, which market makers love, because the exchanges make a boatload of money when they wipe out all that liquidity. So if we came back down to this area and held it as support, I would be looking to take more of my short positions off. I would be still making a profit because I'm adding as this goes up, because I do think we come back down, retest this area of liquidity before making a leg higher. That's what I'm anticipating. And it's pretty much, it will follow Bitcoin's timeline. So just stay level headed. Don't jump to any conclusions yet. That's what I'm thinking of. This isn't financial advice. This is just to give you a scope of what I'm looking at and why I'm looking at it. Because when we broke above the 20, I was talking how that's bullish. You're going to get a bit of a run. We did it over here. We failed here. But the moment we did that, okay, that's great. However, you could see on this one, the next candle that we had was red. So you'd want it to hold the 20 as support. And we didn't do it here, but we did it here, right? So you knew we were going to get a leg up. And that's why I waited to sell my covered calls around this area here. And if I take you over to BM&R, could I have made more money if I would have waited till Friday? Absolutely. To me, the risk reward wasn't there because I sold up here. So it was already at over $23. So right now we're here at 23 or at $24. So you're talking 90 cents more. And if I go to the options chain, it's paying 10 cents more per contract that I got from 3 days prior or 4 days prior. And for me, knowing that we're filling a gap, that it got rejected at the 50, literally right after I sold them. And today's an expiration. We had the Clarity Act that, again, is still stalled. Nothing's confirmed. And we had the geopolitical issues still at risk. That's why I did it. Now, could it go on here and come back down? Yeah, most likely it will, unless it shoots up here into this fair value gap. But still, these are bearish fair value gaps, meaning I shouldn't say bearish. These fair value gaps will get filled. What I meant to say is, can we go to this order block up here, which is a bearish order block, to fill that? Yeah, I do think we will eventually. I would like to see us come back down here, hold as support for me to flip bullish. And then I would cover my short because I don't think this was the last leg down. Now, what else is interesting, if you're saying, well, why do I think this level? If I pull a line here to here, and I take a measured move to, let's say we keep rallying. This is fascinating because this gives you an idea on where we can go, right? So now that this is leg, let's say we break over here. Remember, I was saying that ETH, my target that I wanted to buy BM&R at is when ETH went to 1,600 and change. Now, what's interesting is if I move this up here, we know that this is the bottom. If we break and we come down here, that's the measured move. So the further this continues, it gives you an idea, okay, if it goes up here and this continues and we hold, then I would lean more to, okay, that's it. It's not going below this area over here. It's accumulating at massive amounts and the bottom's in. And then I would be looking to go long around here. But that's why, just to give you an idea, this is a measured move if it broke the bear flag. Now, if it broke the bear flag over here or here, which is actually where I was anticipating for it to do, just so you could see how nothing's 100% because right here, if it would have broke, it would have took it down to the level that I had. But again, the Fibonacci levels held. And these are strong levels. The 0.78, it held right on it, bounced right off. So can we get a flush down to the 0.88? Because this is being pulled from here. So from here to there, I was pulling that Fibonacci level. Absolutely. But at the same time, I got to also be honest with myself that we're in a different, crypto's not in the same market it was 5 or 10 years ago. Now there's securities that are giving more clarity on it. You have the president saying that it wants to have things structured, regulated. So that's going to give institutions more leeway on putting their clients in. If you're managing a family office or anything like that, you're going to be able to allocate 1 to 5% if that's the exposure that they want. So it's not going to be the same. You're going to actually get less volatility, and things will just take, not to say that it can't go down 50, 60, 70, 80%. But when I hear people say, well, crypto's too risky and it's going to, look at this, it could go down 80% or 70%. Why would I want to put my money in that? Well, if I show you the market overall, I can give you thousands of companies that have dropped 20, 40, 60, 80%. Look at the dot-com bubble. The biggest company in the world, Amazon, dropped 90% during the dot-com bubble. Did their business change? Did anything if you liked it at $200, why didn't you buy it when it was $4? That's literally just fear and greed. And this is just something that if you look at what Larry Fink and what all the guys have been saying they're going to do with securities, they want to put all securities globally on the blockchain. So chances are they're going to use ETH to do that because they're already protected from quantum attacks, or they're putting those security features in, which Bitcoin does not have yet. And if you're wondering what I'm talking about with quantum computing, definitely go do your homework on that and read about it, because it's insane. It's insane how fast things have progressed in that sector. Scary, actually. But a lot of people that say, well, if quantum happens, Bitcoin and all this stuff is vulnerable to be hacked and, whatever else, their fear is. If that happens to the level that they're talking about, what difference does it make? Everything in the world is hackable in seconds. Your bank accounts would be hackable in seconds. I can assure you that there's a lot of people in the crypto space that are working on more security than the bank will ever have. So keep that in the back of your mind. Don't get fearful over that stuff. It's out of your control. It's out of a lot of people's control. And the people that are controlling it, hopefully, they know what they're doing. And I'll leave that at that. So another thing to go over is just be level-headed. I know I went on a bit of a rant there. I just want you to just not jump to any conclusions yet and just let things confirm. Yes, right now things are looking bullish, and I hope they stay bullish. This isn't about me being right or wrong. It's just a matter of me making money. That's it. I don't care to be right. If I'm wrong on where it's going to go and what I was anticipating, I'll be the first to admit it. That's the whole point of this channel, is the market is forever changing. There is no right and wrong. You're going to be wrong probably more than you'd like to admit. It's just a matter on how you manage your risk, right? So if you could keep your losses tight and quick and short and put your ego and pride aside, because a lot of people can't do that, and they want to be right and they don't want to take the loss and they get angry, then they wind up taking a $1,000 or $2,000 loss and turning that into an $8,000 loss just because they didn't want to admit to themselves that they were wrong. So that's really the difference between someone who is good at trading and someone who is not, or someone who has failed at trading. Typically their losses, and then when you do have a winner, you want to average into a winner. That's really what I've learned through this process, and reading a lot of books with some of the top traders in the world, is they talk about how they sizing into a position. When you know that, okay, it's confirmed, we're in an uptrend, that's when you want to size in. And as it's going up, your position, you keep growing it. You don't want to always average down, because then you don't know. To give you an example, let's just use this. Let's say it goes down here, I buy some. It goes down here, I buy some more. It goes down here, I buy some more, and I buy some more. By the time we get up here, I didn't make anything. I'm breaking even. So if I were to buy here, buy here, buy here, buy here, this run here would have been more than if I just kept buying down here. If I bought here, 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 this one leg would have been good. But remember, by the time you've bought here and here and here, and then down here, if you had the balls to buy down here, you're exhausted. Now, look how much you're down, and then the fear kicks in. You're typically not going to be barreling in with a massive position at this level. That's what a lot of people lie to people about when they say average down. Yeah, you can average down, and you can, like, it can work. I'm not saying it can't work. It all depends on what your time horizon is. But at the end of the day, what people don't tell you is that they went pretty heavy here. Okay, it's going to turn around. I'm going to go a little bit more heavy down here. Oh, look, it's really turning around here. So now they're really excited. Then they get brought down to reality. Okay, you know what? This is it. This is the bottom. That's a 1, 2, 3. Okay, that's it. I'm going to buy more. They buy even more here. Then this little leg here, what it does to the psychology is amazing. I've been there myself. I've taken losses at the very bottom, all because I was exhausted and fear kicked in, and I didn't have the balls to hold. And I was just mentally exhausted. And I'm like, okay, I'm tapping out. Because then you start thinking, when you listen to the pundits on TV, oh, wow, how much lower? This could be like 1999. This could be like '07. You hear it all the time, the doomsday. So in those situations, what you want to do, step away from your computer, reevaluate, see what's going on, what's the worst case scenario, and don't you talk yourself off the ledge, essentially. That's the best advice. Because right here you would have saw good spike down, good test to the blue down, but you could see it's not going below. Then we got another leg. So if you would have waited, just to give you an example, a week, 1 week would have gave you a little bit more comfort to hold your position and not unload down here. But then if you would have bought above the 20, because now we're holding the 20 as support, and you would have bought above the 200, and then you would have bought it all the way up on these little pullbacks, right? I know they don't look like a lot, but it's like probably 2-3%, and you would have just kept buying on support, the 50-day, because we are in an uptrend. Until the trend breaks, I would be getting out here. We broke the 50. I would be very uncomfortable with my long bias. and I would be putting a trailing stop. Whereas if we right here is actually where I would be tapping out 585. And that's a smart way of playing it. And then if it confirms it's going to go up, because if this were to roll over, there's always going to be another opportunity. So it's the same thing here. Okay, we gapped. All these gaps don't make me comfortable. To me, it's more synthetic. And then I want to see it pull back, and I want to see it touch to 20. I want to see what it does at 607 on the QQQs, right? Because if you look here, it held it and hugged it the entire way. That's what I want to see. And that's what you all should be looking for. Let's see what it does when it pulls back, where it holds support, or does it fail support, and then we make our next leg down to the 0.382 Fibonacci. And this goes both for the Nasdaq and the S&P. So if you found this content helpful, hit the subscribe, comment below, give me some thoughts. And if you have any solutions to what's going on with Instagram and Facebook, because I have no idea. I never had social media till now to do this stuff. And it's interesting, to say the least. There's a few things that have been running through my head, because this is all after I went and used my own vocals. Before I was using AI, I didn't really have any issues. So, and I knew that there are going to be some people following from, there's some people that are watching from my previous life in venture capital. And there's a few people that didn't want me to do the channel that I was working with, just because they'd rather me be anonymous. So, all good. God has a bigger plan. We'll see what that is. So, as I always say, stay disciplined, trade with intention, and God bless you all.